Educate, empower, enable, impact. Thank you for tuning in to That Will Never Work podcast, where we share inspiring information and personal experiences related to business and the entrepreneurial journey from those who are leaders in their respective field. Now, here's your host, author and business coach, Maurice.
I thank y'all very much for tuning in today. I appreciate you. We have a wonderful guest today. He is a CPA, a proud father, husband, wealth optimizer, and a tax strategist, and transitioned to wealth as the business and reached work optional by age 30. He has served as a director of acquisitions for a hedge fund that transacted the largest private sale of homes in U.S. history. His company, Financial Journey, delivers billionaire wealth strategies to millionaires. I thank y'all very much for listening today and coming on. I'll bring none other to you than Keith. Keith, thank you for coming on the show today.
Thank you so much for having me, Maurice.
Sure, no problem, no problem. So there was, like as I told you in the green room, I had listened to some of your other episodes, right? You know, other podcasts, and you had made a statement about traveling the world with your fiance, girlfriend, wife, you know, however because we all got different terms at different stages, right? You know, they're all interchangeable at some point in time, you know, but you came home with a present, right? You know, so one of those things, because in your bio, you talk about being a proud father. And sometimes we as entrepreneurs, we're not ready for something like that, right? Because those father times, those, you know, it's just, it's not always planned, you know, and because as entrepreneurs, we try to plan things out. We try to look at different things, right? You know, so how can you deal with something as uncertain as having a child, right, as an entrepreneur? How can you deal with those uncertainties as an entrepreneur?
You're right. So my son, who is now 5 years old, was the best souvenir we could have gotten out of our travels. My wife and I, and frankly, from a place where we were both going hard in business. She was running our real estate businesses, hotels and apartments, direct ownership, and I was running the CPA firm. And transitioning out of that, we thought we could have a kid, keep on with our lifestyle, but having a baby is like a brick wall. Things slowed down, and everything that we expected, it changed our life. It changed our lifestyle. And so kids are a game changer, and not to sound cliche, but they're also one of the best things ever.
Right.
So there's pros and cons, but for us, it meant a lifestyle change. And so early in our 20s, we were able to focus on entrepreneurship, and allowed us to get ahead. And to an extent, our growth rate has stalled out somewhat because we are focused on family. We are still growing, but not with the rate and focus as we were. So for us as a team, that has meant that I will take charge in certain things, and my wife will still come alongside me. We work together on some things. She works part-time, but we've also got our kids to think about. And for us, taking a step back from some entrepreneurship has really meant an investment in our kid. It's a different kind of investment.
And so I brought up the child analogy because a lot of times we come across moments that are unchangeable, you know, because you're not going to want to change. You're not going to want to give up your kid. You know, that's like you said, that's probably the best souvenir you could have ever asked for, you know, so but we all have to make changes on the fly, you know, so as we sit down and try to make strategies to grow our company, to grow our business, to just, you know, grow our wealth and financial freedom, what do we need to do? What characteristics do we need to take on in order for us to look at the long term?
So there's a few things that come to mind. First and foremost, if we're selecting a business to get into or to start, I want to begin with the end in mind.
Mm-hmm.
Meaning, what are we going to be able to sell that business for someday? What kind of time requirements is that going to be? Am I naturally a person that is really creative and I don't need a lot of structure? Then I might go out and create my own thing if I'm a hard driver. If I thrive better in structure, then maybe I'm going to do a franchise or buy into a franchise because that franchise is going to help me grow. And there's other elements to it. However, if and I'm going to think about the time it's going to take as part of that. Is this something I can do like with my kids,
Right.
part-time on the side? But then stepping back, like once I figured out what the time requirements are, what businesses are going to fit my personality and other things, I'm also going to take a look at what's my overall financial picture. So for some, this can be a multi-pronged approach. So I really look at one of the big things that billionaires do that millionaires don't is they look at wealth as the business. So often people will have an exit and then they take all this money they made from selling their business and now they got to go learn something new, like how to manage it. They either turn over to a financial advisor who takes his big fees for managing for you, or you can self-direct. And a lot of entrepreneurs like control and want to self-direct. And so that's a whole other shift to do. And if you can, along the way, if you're somebody who likes control, you like to self-direct your investments, you can do that. And maybe that's as simple as getting some rental property or other things like that. But it's about looking at your skill set, what you like to do, and your total family picture, including your kids and lifestyle, and putting something together that fits you and your desires.
So Keith, I haven't figured out what my skills are. I haven't figured out what I really want to do, so, but I know the end game is for me to become wealthy, right? So how would I find that skill or something that I'm good at? I'm not sure yet. I haven't figured it out.
So we take people through an exercise, and I'll tell you a little bit about what that is here so people can do it themselves. And it's what we call like your competitive advantage. So it starts by assessing what are your skills, your financial resources, your relationship resources. What are you good at? If you're not really sure, start by asking 3 friends, family members, and ask them, what are you good or bad at? And friends can give some brutally honest advice.
Right.
But then, at least for us, is we take that information and it's what businesses, investments, etc., align with your personality, your values, your profile, and we start to brainstorm different possibilities. And this could be something that different people in your audience do within themselves. If they're able to get together with other entrepreneurs and just self-brainstorm, what are the possibilities? Probably the number one driver of my success, especially early success, was forming a mastermind. You can go pay gurus tens of thousands of dollars to do that. But for me, going to a conference and just inviting people at a similar age and stage of life together to meet together, and we just start talking and we meet regularly, that has done more for me in my journey to wealth than anything else.
So right now, listening to you talk about children, right? your children are under the age of 10, right? Mine are over the age of 20, but
Oh, wow. Yep.
and so and I'm bringing that up because the idea would be, hey, for those of our listeners out there, I want to be wealthy, but because my kids are older, I'm in my 50s, I'm late, early 60s, whatever it is it too late for me to think that way, whether to be wealthy, number one, and or number two, to even consider starting a business at an ripe old age of 60?
No, absolutely not. There are some people like Colonel Sanders,
Right.
KFC, that started late in life, 50s, 60s, and ended up making it big. So it's never too late. And there's 2 things I want to caution here. There's this desire for people in their 50s to like try and make up for lost time. And sometimes what that looks like is being in overly aggressive investments that don't always pan out. Maybe they do, but it's almost like buying lottery tickets, hoping that this is going to catch you up. And sometimes the slow way consistently is the better path. So if we're looking at somebody in their 50s and it's evaluating what's going to make the biggest result. So if you're going to get the biggest wealth growth, it's typically going to be through business ownership. Business ownership has the highest chance of giving you a big wealth growth because you're putting all your time and effort into it. Real estate is going to be a little slower, but more reliable because you've got both a business and assets that are tied up into it. So probably the simplest retirement plan you could have that's almost risk-free is buy one rental house a year per year for 20 years. And usually 20 rental houses is enough. You're not going to be rich, but it'll be enough to provide a stable income, and you're going to have a lot of equity in those houses as time goes on. One of the more risky ways is frankly traditional assets. So stocks and bonds can be traditional, but how many millionaires do you know that made it rich by just investing in stocks and bonds? They're usually people who started young and by age 60 or 70 they got there, but it's also can be somewhat reliable depending on the market cycles. So if you're willing to put in some effort, I know real estate is going through a tough time right now with interest rates. We've got the first beginnings of looking like there might be some cuts coming here, but real estate, business, kind of in that order, is where I would personally lean as somebody who likes to self-direct and like some element of control.
So, Keith, I've been working my 9 to 5 for the last 15, 20 years. And unfortunately, those golden handcuffs got me kind of tied up, right? I don't want to leave my 9 to 5 that, I don't want to leave that 401k, that has, the 35, $40,000 sitting to the side, but I really would like to, I understand that in 20 years, when I'm ready to retire, it won't be enough to live day to day. So how can I increase that or enrich that so I know that, hey, you know what, I can become financially stable by the time I am retired, hopefully at 65.
Yeah. There's a few things that come to mind. One, if you're looking at entrepreneurship, I'd rather start it as a side hustle. Often people will think this new idea is going to work out. Entrepreneurs are full of hope, which can be a good thing to get them through the tough times, but typically things just take longer than expected. There are more delays, and you've got to have enough capital in your bank account to help you overcome those delays while you figure out and work out the nuts and bolts of what's working or not working in your business. The other thing is, so if you start that side hustle and it is working, and it can be some longer hours, meaning you might be working 8 hours a day in your day job plus 4 hours a day in your side hustle. And then you've got kids in there. I really want you to be intentional with what's important, because that's a big trade-off you're making. The golden handcuffs, some of it's depending on what you get. So my mother worked for the college system in California and retired with 90% of her salary for the rest of her life. That's just the deal. And that was some pretty nice golden handcuffs for her. And it's going to work out. Now, if you do have a big retirement account, I would consider, if you want to self-direct, there are all sorts of companies out there that will allow you to do self-directed IRAs. You could start by putting small amounts over into some different investments. You can buy rental houses with it. You can buy all sorts of things. And there's actually some very unique tax strategies that can help you roll money from a traditional to a Roth account at a big discount.
So is it cost effective? Because you've mentioned real estate more than once. Is it really cost effective for me to go into that, especially if I don't look at myself as a landlord or anything like that? Is it, one, cost effective for me to even consider that? And number two, is it cost effective for me to find a management company to help me manage that too?
Those are great questions. So to be clear, I got my start in real estate in 2010, and it was a very different start, very different time to get started. A lot of friends and peers, as a CPA who's focused on high net worth apartments indicators, a lot of them are struggling right now, and some of them are going bankrupt. So it's a tough time to get in. The other point, though, is real estate is local. And so knowing your local market, going to a local RIA, real estate investment association group, and you can start to dip your feet in. And it might be rental houses, could be Airbnb, could be you buy a duplex, rent out half. There's a ton of strategies out there. It's about finding something that works for you. If you don't like the idea of being a landlord and that gives you a headache, then don't do it. But there are ways in time to make it easier. A lot of people will get a management company, and management companies, by the way they're incentivized, are incentivized to do as many as possible and do as little work as possible. There's incentives aren't aligned under a traditional 10%-ish management fee. And so a lot of people will switch it out and in time start their own management. There's ways and tools to get VAs and other things in there to make it easier. But it is going to require some work. And I don't want to be fake about that. I really, so you're going to get some cash flow, which is going to make a difference. But usually the biggest growth is the appreciation over time.
So as an entrepreneur, a lot of times when we start to analyze other entrepreneurs, their structure or their roots of wealth management, wealth assessments, whatever it might be, the ground floor, a lot of times it is real estate. We see that, because it's consistent, like you said, stable, that type of thing. Are there any other things that we can invest in to create that ground? If we're not landlords, right? Is there anything else that we can invest in that could help us have that stable ground to build upon, where we know we can have at least a couple dollars coming in every month?
There's a few things that come to mind. If we're talking businesses, that's where maybe the franchise model makes more sense. If you want a structured approach, it's going to cost a little bit of money, but it might be worth it for you. Especially if you don't have a clear picture of what those businesses are. There are franchise associations that will go out and you can actually almost date your franchise to ensure what's a good fit. And as with anything, talk to franchise owners or other people in that business and ask for them. If you got a clear picture on what your side hustle is, you got a passion, you know it's going to make money, by all means, go for it. My caveat there is talk to a business broker now and ask them about the need for that business, the sale, are they sellable? And maybe you even buy a business from a baby boomer and cut the first 5 years of struggle out by getting somebody else's business. You could do a SBA loan, put $100,000 down and buy $1 million business with some existing infrastructure. And that might be the right approach for you. The other thing that we do, we're in Texas, oil and gas. There's a ton of scammers out there, but we've got a due diligence council in our group. So when we vet stuff, our volunteer community-based due diligence council. We've got the chief drill officer of a publicly traded company and other volunteers who have been in that group for years. So our doctors and lawyers don't necessarily know how to vet an oil and gas deal. But if you got your peers that are also looking at things, that helps make a difference. Or if we got a medical practice buying fund, then our doctors might be able to vet that. And so it's about pulling the right experience, because everybody has something to give. As an entrepreneur, you all have some experience, even if you've just been employed by somebody else. The key is, how do I use that experience and overlay that with a business or some sort of investment I want to start?
So let's say, Keith, I mean, just go with me here.
Please.
I have a really good friend, and he told me that I need to invest into the satellite dish business. He's selling it, that type of thing, right? Is that something that I should invest in? Because again, I'm still working 9 to 5, and he offered me it seemed like it's a great deal. Every dish I sell, I can make $15, $20 off of that. Is that something I should invest in?
I don't know enough to say yes or no. I don't know if it's multi-level marketing. Typically, just the people at the top win in those. And I tend not to invest in things I don't understand. Somebody might tell me it's the greatest deal ever, but if it doesn't logically make sense to me, it doesn't make sense. So, for example, we've had an ATM fund that's just been putting out returns for years. And that's like, you're going to earn 20%. I'm like, how do you earn 20% off these machines? Who's still getting cash out? I know some people do, but it just didn't quite make sense to me. And it's recently come out that the SEC is taking action, saying it was part business and part Ponzi scheme.
Wow.
And so even though people have been getting results for 12 years, there's an element of me, I just don't understand for 20%. That doesn't make sense for that kind of return. If it's really that good, why aren't the big players doing Blackstone? So if anybody's saying this is a really good deal, you should do it. And it's like, well, why aren't you doing it? Why are you, if you're going to sell stock tips, it's the greatest thing ever. Why don't you just go do it yourself? Why don't you work for a fund? If Goldman Sachs or somebody else can pick up the same strategy, they would be doing it. So what is different about you? And maybe there's a good reason,
Right.
but if it's too good to be true, often it's not. And we've had a lot of investors learning that the hard way over the last 6 months.
That's funny because I have had friends that come to me say, Maurice, I got the greatest idea. And what would you invest in it right now? I'm like, I don't have time for that right now. I've done the MLM type stuff. It never really worked out, like you stated. Like it the top people are making the money. Sometimes the bottom people are not. You're getting left behind.
Yeah,
and it's too many people at the bottom anyway.
Yeah. And in your case, if you're a business coach, that's where running an accelerator or getting a piece of the equity, if you're helping people grow, you're providing ongoing value. That might make sense for you. And that's an example of a possible competitive advantage you would personally have.
Right. So yeah, but Keith, man, I thank you very much for coming on the show, man. You provided a lot of great information, and in case someone has that opportunity of a scam or whatever it might be, where can they reach out to you and talk to you about these opportunities, if you were, these other opportunities to make some money?
You know what? So one, start with, this is going to sound cliche, but do your due diligence. Like we have found, like, quick insider tip is we can use things like OpenAI, ChatGPT to send them our documents and say, what are the issues, or are there any scammers? And it will find stuff. It'll search the internet and tell us issues and give us summarized data about what is a possible scam quickly and easily. And people want to learn about what I do in Financial Journey, helping entrepreneurs, business owners reach work optional in 3 to 5 years or beyond that, to wealth optimization. You're welcome to connect with me at financialjourney.life/podcast.
Nice, Keith. Thank you very much. Of course, this information will be in the show notes. Now, Keith, before I let you go, I have to ask you my question, my would you rather question. Now, Keith,
Sure.
Would you rather choose 3 doors or a fork in the road?
3 doors or a fork in the road?
Yes, sir.
I like more options, so I'd choose the 3 doors.
And any particular reason why, beyond just you like more options? Anything a little deeper? Or no, that's just you like more options?
I'm a very technical brain, and so I'm really trying to think. I'm like, are the doors nice? Are the medieval style doors, modern art doors? But it sounds like a more fun exercise.
So it's not any parameters based off of it. It's just a thought into or a look into your brain, how you might operate and how you come across making a decision in anything and everything in business. That's all.
That's interesting. I'm curious to learn more about that.
So again, it's not a right or wrong answer. It's just really fun way to just, hey, you know what? Maybe I think like Keith. You get what I mean? And hey, I need to know more about this stock. So let me look at different ones that maybe offer the same thing, but this one might be a little more different in reference to stock options or how it's paid back or whatever it might be. So I think those are the type of things that I've seen people being able to glean from when people have answered this question.
Got it. And to be clear, I do try, as there's endless opportunities out there, but I somehow want to understand all of them. And then, like, what's the best? I want the best. And so there is no one single answer for everybody, but we'll sum it down like on our investment menu. Here are the top 10 things. If you want cash flow, pick from these 3, or you want equity investment, pick from these 3.
Right.
And so we really try to help identify the best. And there's endless options out there. So it is a fun exercise.
Oh yeah, most definitely. But Keith, thank you very much, man, for coming on the show today.
Thank you. Appreciate it.
No problem. And thank y'all very much for listening to That Will Never Work podcast. And I will talk to you a little later.
Thanks for listening. Find us on social media at Chisholm Group LLC and check back weekly for new episodes. Until next time, that will never work, or will it?